Ni hao. Hello, everyone. And I hope you enjoy your new year next week and the year of the ox, a perfect symbol, a very hardworking animal. And we hope to leave you with the impression that we're also a hardworking company. Very glad to be here and tell you a little bit about Golden Valley Mines. And Golden Valley is based in Val-d'Or, Quebec, which is the center of mining and mining exploration in Eastern Canada. So I hope to tell you a few things that'll leave you with the impression that we're quite different than many of our peers. You know, it's no secret that in public companies, a lot of the money that's raised goes to support the industry, not just the company. So listings, legal, audit, marketing, etc. We really focus on dilution to our share capital, and in particular, trying to avoid dilution to our share capital. So I hope to be able to show you with a few concrete images how we do that. An image about our share price, looking back over the past year, we've actually done pretty well. We're up about 35% on the past 12 months, but much better than that over the past few years. And I like to always tell people that the most important shareholder group are the board of directors. So the board are actually the largest single group, owning about 30% of the shares. And we're not a new company. We've been around 20 years. So the fact that the board are the largest shareholders should tell you something about what the insiders think of the value proposition. And just as important is that the board has effectively doubled its ownership in the past 5 years. So we were at about 12% 5 years ago. Now the board owns 30%. And the other shareholders are important too. Quebec government have been very big supporters through 4 of their funds, including the Caisse de dépôt, the largest pension fund in Canada, who own about 5% of Golden Valley. And some of the other names you might be familiar with would include Rob McEwen, who owns about 3%, and a Chinese nickel mining company from Jilen province in northern China called Jilen Nickel Corp. They own about 2% of Golden Valley Mines. I think it's also important to note that we're one of the few junior mining companies that actively trade in the United States. So last year in about June or July, we graduated on the OTC, over-the-counter network, to the QX, their highest level. And we've been trading between 40 and 50% of our daily volume since then on the OTC. So that's quite a bit different than the way that most junior mining companies operate. A few words about my board of directors. First, we're small. We're only 4 directors. We're the largest group of shareholders. Joe Groya is the lead director. He was the former director of enforcement for the Ontario Securities Commission, and he's our lead director and a very active shareholder. Jimmy Lee, a Korean from Seoul, but who really made his stake in Vancouver, University of British Columbia graduate in chemical engineering, and is the chairman and largest shareholder of a New York Stock Exchange listed pulp and paper company called Mercer International. Jimmy Lee owns about 23% of Golden Valley by himself. Bill McCartney formed one of the largest public accounting firms in Western Canada called Davidson and Associates. And the 4 of us together own 30% of the company. That's quite unique. And our board has been consistent for the last 10 years. This is the first of several charts showing how Golden Valley has performed over the past 5 years or so. There are 3 lines on here I draw your attention to. Golden Valley's performance is shown in dark blue, trending from left to right. And at the very least, you can see that we've performed very well over the past several years. The price of gold is shown, of course, in the gold color along the bottom of the graph, and that even includes the dip today in the market. And in light blue would be the TSXV index. So the index of nearly 2,000 public companies compared to Golden Valley and compared to the price of gold. We've done pretty well compared to most of our peers. Here are 2 other comparatives. The first one being other mining companies that work in this area. namely Eastern Canada, Quebec, Ontario, and there should be some familiar names to some of your investors, including Osisko, Probe, Renforth, Monarch, to name but a few. And we've done very well compared to the peer groups. In fact, one of the only companies that's consistently done better than Golden Valley is our own subsidiary, which is a public company and which we control, called Abitibi Royalties. And I'll say a few words about Abitibi in a few more slides. Because we're focused on royalties, a few comparatives about royalty companies, and these names should be very familiar to many of your investors. Franco-Nevada, Altius, Sandstorm, Osisko Gold Royalties, Royal Gold. And how does Golden Valley, or how do Golden Valley and Abitibi compare to them? Well, pretty well, actually, over the past 2 years, 5 years, and even going back further, back 10 years, Golden Valley and Abitibi have outperformed the price of gold, the TSX Venture Index, peers that are working in this area, and the biggest royalty companies in the mining industry. We've done pretty well compared to all of them. Our business plan in a single image would be what I'm showing you right now. Golden Valley would be the large circle on the left of the image. The top circle, Abitibi Royalties, showing you our principal asset. That's the royalties company. And as the image shows, Golden Valley currently owns 44.9% of the royalties company. That's significant because it has a market cap of over 300 million Canadian, and Golden Valley owns nearly 45% of that. If you add my personal shares and the board members' shares to Golden Valley's holdings, that's over 50%. If anybody wants to do a transaction on Abitibi, it must be through Golden Valley. The other circles, Val-d'Or Mining Corp is another subsidiary that we formed and listed on the Venture Exchange. And that's a project generator or prospect generator working in this area, Quebec and Ontario. We stake properties, we acquire properties, we drill properties, we joint venture properties, we work in gold, we work in base metals, we have worked in uranium and diamonds. Val-d'Or Mining Corp is where we test the ideas. And who's the largest shareholder of Val-d'Or Mining Corp? Golden Valley Mines, with just under 40%. International Prospect Ventures is also a prospect generator working outside Canada, currently only in Western Australia. And I'll say a few words about that in a few more images. And the bottom circle is the part that's conventional or familiar to many investors. Arm's length joint ventures with other public companies. And the interesting part about this is all of the funding, all of the expenditures are assumed by the joint venture partners. Golden Valley gets a free ride, and Golden Valley is left with royalties or free carried interests after the partners have completed their earn-ins or vestings on our properties. The whole point to Golden Valley is to avoid dilution to its share capital. And to that extent, we've been very successful over the past 5 years. Here's another image that shows you something of the value proposition. On the upper right, the square showing 88 million would be Golden Valley's market cap today. So 13.5 million shares trading at between 650 and 730 Canadian is around 90 million Canadian dollars. The important part is the square in the middle line on the far right, showing $145 million. That would be the net asset value, the sum of the parts, the value of what Golden Valley owns. So that number comes from the shares we own in our own subsidiaries, Abitibi Royalties, Val-d'Or Mining Corp, International Prospect Ventures, and other public companies. So if I told you you could spend $1 and basically get $1.50 worth of value, most shareholders or investors would think that's an interesting proposition. And that's what I'm trying to show you here. Our market cap is 90 million, but we currently own over $145 million worth of assets that are free trading and that support the share price day by day. And that's why we don't have to dilute. And that's why we don't want to dilute. Who are the largest shareholders? the board of directors. Why would we want to dilute ourselves? And the answer, of course, is we do not. And that's why we don't issue shares. We don't do other joint ventures where we're the funding partner. Our partners fund exploration on our properties. That's very different than the way most of the mining industry works. So a few more details to support those statements. On the top line, showing the 3 public subsidiaries. In 2011, Golden Valley spun out 3 public companies, Abitibi Royalties and what are now International Prospect Ventures and Val-d'Or Mining Corp. It was a plan of arrangement, and the 3 companies were listed on the same day in July 2011. So in numbers, Abitibi Royalties owns, or Golden Valley owns, 44.9% of Abitibi Royalties, which is 5.6 million shares, trading at nearly $25 per share right now, up from 30 cents when we did our initial public offering back in 2011. And similarly, we own over 4 million shares of International Prospect Ventures and just over 25 million shares of Val-d'Or Mining Corp. So a few images to support this. Abitibi Royalties, small share count, 12.47 million shares issued. And that's actually going down. We have a normal course issuer bid or share buyback in its 3rd year. How many mining companies buy back their own shares for 3 years? So that's been a key part of our business plan. We started paying a dividend a year ago in the 4th quarter of 2019, and we've just increased it. So who receives most of the dividend? Well, Golden Valley, who own 44.9%. And that's why Golden Valley doesn't have to issue shares, because the dividend income is more than sufficient to offset all of the burn rate, all of the costs. Exploration, listings, legal, compliance, marketing, everything. Taxes, because we actually do have to pay taxes based on our business model. In terms of our trading volume and market capitalizations, this image shows you how we've progressed since 2011 to the current time. Our market cap was as low as 3 million. With Abitibi Royalties, it's now over 300 million Canadian dollars. And similarly, Golden Valley's market cap was also in the $3 million range and is now in the $90 to $100 million range, largely reflecting the increase in Abitibi Royalties. So what does Abitibi Royalties own that makes it worth nearly $25 a share? And how does that explain Golden Valley's valuation? This is the largest gold mine in North America, Canadian Malartic, right near where I'm sitting in Val-d'Or, Quebec. It's about 15 kilometers from here. The yellow line is actually a provincial highway, and it produces over 600,000 ounces a year. And our principal asset is the 3% royalty that Abitibi Royalties owns within that mine on the east side. The other blocks and colors, yellow, green, gray, gold, etc., show you some of the other royalties and net profits interests that we've acquired over the past 3 years. These are images that show you that it's not just a few words on a PowerPoint, but this is what it looks like. The upper left is the open pit at Canadian Malartic. That's a 10 million ounce deposit from origin to where it's at right now. That's the largest gold mill in the history of Canada on the upper right, currently processing over 55,000 tons per day. You know, the typical gold mine in this part of the world produces 5,000 to 6,000 tons per day. They produce over 55,000 tons per day. And that's where our 3% royalty is, on the east side. A few words about some of our prospecting ventures. International Prospect Ventures, similar business model. Largest shareholder is Golden Valley Mines. We like simple ideas and chasing them down. So it's very simple to understand the basics of plate tectonics. South America fits very snugly into the continent of Africa. 3.7 billion years ago, things moved apart, 2.7 billion years ago. And that's true also for West Australia and South Africa. And that's important because South Africa has been the largest source of gold production in the history of the world, producing over 1.6 billion ounces to date. So when we understood that, International Prospect Ventures acquired the properties shown in red. There are 8 of them covering 250,000 acres in West Australia. And our program in this area is to explore for grassroots origin of the nuggets. We've recovered over 200 to date, including 1 nugget over 7.5 ounces. That's a 20-cent Australian coin. And that's a 7.5 ounce nugget that comes from inside one of International Prospect Ventures' 8 properties. We're not trying to recover nuggets. We're trying to find the source of those nuggets. And we'll be doing that for the next few years in West Australia. Val-d'Or Mining Corp, and a very similar business model. The largest shareholder is Golden Valley Mines. With Val-d'Or Mining Corp, we're a prospect generator. We stake properties, we acquire properties, we test properties, we find joint venture partners, we avoid dilution to our share capital. The largest shareholders are the board of directors and Golden Valley Mines and the Quebec government funds again. Very similar business model. We're focused only on Eastern Canada, Quebec and Ontario in particular. And a few words about our joint ventures as I wind up. These are the arm's length joint ventures. There are several within our portfolio. I'll mention 3, one of them being Bonterra Resources from Vancouver. Bonterra optioned one of our properties, leaving Golden Valley with a 15% free carried interest and a 3% NSR, net smelter return or royalty. They've spent over $2 million over a 3-year period and issued over $200,000 worth of shares to Golden Valley. And all of the income that Golden Valley receives is redeployed and used to prevent dilution to its share capital. Similarly, one of our active joint ventures ongoing as we speak, with a drill on the property right now, is with O3 Mining, part of the Osisko Group. O3 are earning an interest in our property as well that will ultimately leave us with a 20% free carried interest and a 1.5% net smelter royalty or return. They also have to issue $250,000 worth of consideration, typically paid in shares. So these are good ventures for Golden Valley as we convert properties that of course have expenses on them. We convert those properties into joint ventures and ultimately into NSRs and free carried interests as we receive equity consideration and cash payments. And this is a final word on a joint venture that is vested and completed. Our partner was Sirios Resources from Montreal. They've spent over $5 million on this property as they earned their interest, leaving us with a 2.5% to a 4% NSR, fluctuating with gold prices. Currently, it's a 3% NSR. It's important because that's only 10 kilometers from the Éléonore gold mine operated by Newmont. So these are the concluding statements. Unique transactions, trying to unlock shareholder value, strong share performance, not just over the past 10 years, 5 years, 3 years, 2 years, 1 year, year to date. We've performed better than our peers, better than the gold price, better than the TSX venture. No debt, nothing hidden on the balance sheet. And the business model is entirely based on no dilution or minimal dilution. And there hasn't been any dilution for the past 5 years. We're prospectors. We fund small programs, we find partners, we advance the properties, we retain royalties, and we do that on various commodities. Not only gold mostly, but gold, base metals, and historically we've worked in uranium and diamonds and so on. So thanks very much for your consideration. Always happy to take questions. And if you can't get your question in on this call, do call me or do send an email. Always happy to respond to investor inquiries. Thank you. Sheshi.
Thank you, Glenn. So let's take 2 questions quickly here. The one from Johnson. Yeah, he said your insider holding is pretty good, but it's about thinly traded. How do you address the volume issue here?
I don't consider that an issue at all. We used to trade a lot. We did a consolidation of 10 for 1 last July. That's part of an initiative in the United States. We're looking at a senior listing. The only place where we were not compliant was our share price. So with 135 million shares issued then, we were trading at around 50 to 60 cents Canadian. We did a 10-for-1 consolidation to make sure that we more than met the minimum share price requirement for NYSE American or NASDAQ. We're in discussions with both. Haven't decided if we're going to do that yet, but by doing the consolidation, consequently, we definitely reduced the daily trading volume.
Sure. One last question here. We're running out of time here. Couple from Eric Lemieux. So, Cisco royalties had a few appearance difficulties in the incubator model. Any comments? And shall your nimbleness sustain your track record of success?
Well, no comments about peers or competitors, of course. That's not appropriate in a forum like this. Our business model is not about fostering and creating companies. It's about minimizing dilution to our own share capital. So the companies that we formed and spun out using our own assets and then finding arm's length partners to fund exploration in them is all based on minimizing dilution to our share capital, even in our own subsidiaries. So that's quite a bit different than our competitors' prospect generator and models. Thank you very much. Enjoy your New Year's next week. Thank you, Gilbert.
Thank you. You too. Have a good day.